Hey there, it's Casey Dimon here, TaxSaleAcademy.com. Every tax sale investor has seen it at one time or another. A piece of property is announced at the auction, and there are no takers. No one bids even the minimum bid amount. So what happens next? What happens to all the properties that go unsold at tax sale auctions? Well, unfortunately, they don't just start handing these properties away for free as if they're candy. Now, depending on the state, there are a few different things that can happen to these properties. In this video, we're going to be going over the three most common ways they sell these properties. The state law will generally dictate which process is going to be used by each county that you're investing in. The first one, in some states, the law requires that the properties be auctioned off at a later date. This could mean that they're auctioned off the following week, the following month, or maybe even the following year, depending on the state and how they operate. Now, sometimes they're going to be offered at exactly the same opening bid that they didn't sell at initially. Other times, they'll be auctioned off with a lower opening bid that continues to get lower and lower and lower every subsequent auction until the piece of property finally sells at some price. And in other areas, they'll be offered at no reserve or some sort of nominal opening bid amount. The second way is over the counter, also referred to as OTC, which is common in many states. As the name suggests, you are essentially buying a piece of property over the counter. Now, as with properties that are re-auctioned, as we talked about in the first example, the price could be the amount of the opening bid that it didn't sell at. Or it could also be much less. And again, it depends on the state's laws. And a lot of times it will depend on how long the property has been held by the county. The process might even involve submitting offers or getting some sort of county administration approval, as the process can vary state to state. Now, I've done multiple videos on this specific subject, and you can search OTC over on my website for more information. The last way that we'll discuss is properties are held by the county. This is where simply the county holds on to these properties. They keep them. It could be worthless properties, or it could be property that the county just wants to hold on for green space. It could be a property with environmental issues, or they might have another intended use for it. In some areas where the government doesn't specifically have a use for that property, they can still hold these properties in what's known as a county land bank. The land bank might sell it at a later date. They might try to sell it to a neighbor, or they might develop it for low-income housing. There's all sorts of other things a county land bank can do with properties. So as you can see, if a piece of property doesn't sell at auction, there is always a backup plan for the county. So take a few minutes, call the county in the area that you're investing in, and learn what process they use and see if there's a way that you can capitalize off the unsold properties. For more information on purchasing these unsold properties or on tax sale investing in general, head on over to my website at TaxSaleAcademy.com. Again, the website's TaxSaleAcademy.com. Have a wonderful day, folks. Bye-bye.